All right, Ryan, let's talk about some of the products to use in 2024. The first one that makes the list is Tether on Tron. Okay, so this is the Tether stablecoin USDT on Tron. Why does that make your list of a top product for 2024?
I just thought it was fascinating to look at the metric that I included as part of the visual, which is the number of addresses that hold $1,000 of USDC versus USDT. And essentially, it's about 200,000 wallets in each case. At least it was at the beginning of the year. And then basically all of the net losses for USDC wallets in that regard. I don't have the numbers in front of me, but I think it was like 240 down to 200,000 wallets with that description for USDC. For USDT Tether, it was basically the inverse, and they've climbed all year, particularly on the back of the Silicon Valley bank crisis in March. That I think hurt Circle because they had their assets at SVB. So yeah, the great irony is that Circle probably needs better protection from the U.S. banks than the U.S. banks need protection from crypto.
Absolutely.
Um,
Ridiculous, by the way.
and and I think the I think Tether on Tron and Tether just in general, but I think Tron being the primary settlement platform, in terms of the availability in Latin America and Africa and Southeast Asia, it really is, I'd say probably the most widely used killer app for crypto, particularly when it comes to financial inclusion that we've seen to date. So I did not have that on my bingo card for the most widely used and most important apps that we have, but I do think right now it's probably the case.
I mean, it's just Tron usage of USDT is just slightly trailing Ethereum at this point, which is incredibly impressive.
I thought it was higher.
It may be higher too by the
Yeah.
time we're recording this. Actually, we had Matt Siegel on from Van Eck, and he had kind of a contrary prediction I want to run by you. He actually thinks that USDC will flip in Tether in 2024. And the reason, I think his unstated reason is basically Treasury goes after USDT in a big way and tries to squash it out and snuff it out and shut it down. What's your take on that?
Well, I wrote about this later. I don't blame you if you didn't actually read all 90 pages of the first half because it's a beast, and I didn't give you a whole lot of turnaround time. But I could be very wrong about this, but I just have a hunch that it's all kayfabe. You're familiar with this concept in wrestling, right? Kayfabe
No. Refresh me.
I think generally people should be aware of this when it comes to politics in general. Kayfabe is essentially it's all somewhat scripted, right? So like all the anger, all of what's happening in public, right? It's performative, but in private, the reality is very different. And I think if you look at Tether, like this is a perfect situation where you could see like real like crypto kayfabe between the U.S. government and a project like Tether. Tether's this one of the largest buyers of U.S. Treasuries. They work very very cooperatively with the U.S. government when it comes to things like AML KYC, and the alternatives for the U.S. government are basically shut it down and lose a surveillance partner, or to let it go on and keep an eye on it and make sure that it doesn't get too big or out of control. But otherwise, we'll sell them some treasuries, we'll keep an eye on it, and ultimately, if they want to survive and not go to jail, then they'll play by our rules. And I think I find it very difficult to believe that the U.S. government wouldn't have found a way at this point to go after Tether unless there was that dynamic in the backgrounds. And frankly, I think that's kind of good for all parties, but especially for Tether, which literally and figuratively just prints money as a company, since they sweep the interest on those treasuries basically to the company versus to anyone that's
So you think all the talk from
investing
Treasury
the
is like
underlying.
performance art? Like they really don't, they're just talking a big game, but when it comes down to it, they're happy that Tether exists, and they'll be happy to let them to continue to exist
Yeah,
so long as they're
because
abiding by the rules.
ultimately, I think they'll be able to seize those assets
Yeah.
a little bit more easily, right? Like it's different from Binance in the sense that Binance, well, it's similar in some cases, right? I mean, Binance gets a big fine. There's There is a deal that's ultimately cut in terms of what CZ is going to have to cop to, and we'll see what his sentencing is, but obviously could be radically reduced versus what you might expect given the magnitude of what was accused of Binance. But the trade-off there is now the U.S. government is a little bit more closely tied to Binance, the platform, and now has better surveillance capabilities. So to the extent that you see anything at Tether that is similar in terms of the government kind of cracking down on them or going after them, I would imagine it's probably not dissimilar from the Binance situation, in that Tether is basically allowed to exist. Maybe they pay some sort of fine, even in the case that the government really comes after them, but the U.S. government just finds a way to tighten its surveillance hooks into the project, and the more they play up the Wild West nature of Tether, and the more they fight them in public and kind of engage in kayfabe here, then the more credible it looks, right? And the more people will continue to use this asset that can then be fully surveilled, and the that liquidity and all of that demand doesn't just flow to something that is even more difficult for them to wrap their heads around from a sanction standpoint, or just a general surveillance standpoint.
So, Bankless listeners, there are a number of other products on Ryan's list: Celestia, Fire Dancer, Farcaster, Lido, CCIP from Link, Project Guardian. There's 2 layer 2s on this list. We haven't talked about layer 2s up to this point. Maybe let's talk about Base then, from Coinbase. So why is that on your list as a product to watch and use?
Well, I think just generally Coinbase had a monster year. They stayed out of trouble. They've been on the right side of and a really good relative positioning in all these legal battles. They're the net beneficiary of the drama at Binance on the one hand, the concentration of kind of custodial assets on the other. When you look at all the ETF providers that have been choosing Coinbase as their surveillance sharing partner and ultimately their custodian for these applications. But I would actually say that one of the most interesting things about the business is all of the on-chain and kind of permissionless infrastructure they've been building. I think the Coinbase wallet is best in class right now. The MPC wallet, they've made a lot of investments in terms of the kind of embedded wallet as a service infrastructure they've been promoting. I even joked, with Brian at Mainnet, like I feel like I'm kissing his ass, and I'm usually a pretty tough critic, but I just think that they've been monsters this year from a performance standpoint, and they're almost back to break even a pretty kind of hellish exchange backdrop. And I think Base is kind of that last missing piece of the puzzle, right? So they had the wallet, but Base basically is the parallel chain that allows them to quote unquote kind of take an L2 or a an exchange affiliated blockchain network public without all of the baggage associated with BNB, or kind of actually issuing or selling a token and then trying to prop up an ecosystem that way. So they're basically able to use the Optimism stack. They can be contributors to that community. It's highly performant to their specifications. They'll be able to build an ecosystem around it. Now the line's getting a little bit blurrier between the Base blockchain, Coinbase, the company, all the permissionless tools that they're building, and you've got this kind of spectrum of lock-in across both centralized and decentralized alternatives for people getting into the crypto industry. So it's equal parts, I'd say, a way to continue to keep their users essentially have their cake and eat it too, kind of keep users locked into the Coinbase ecosystem. But I think it's also a really invaluable hedge to have, given the positioning, in the U.S. For a regulatory standpoint, where they need some way to play in these frontier markets where historically they've been penalized by the uncertainty in the U.S. and not being able to fully engage, right? They were handcuffed by the number of assets they could do versus an overseas exchange. It would list everything, right? And so I think that patience is ultimately, getting rewarded in the stock price. But more importantly, I think it's just a really excellent, kind of addition that they made, and kind of, core asset that they have. Not that they own it outright. Maybe they'd object to my framing, but I think, that affiliation and that outlet for some of this, on-chain activity to this L2 is going to be pretty invaluable for them moving forward.
You think they're going to make a big play with USDC and stablecoins on top of Base as like a
Well,
payment
yeah, yeah. I
network?
mean, I think that was one of the big additions here is the ability to actually, natively pay for transactions using USDC and not just, another kind of roll up token, right? So I do think, there's some 4D chess that's being played on Base, and all of it is kind of net good for users. If you look at kind of friend tech and the explosion that it had over the summer, that whole onboarding process, the bridging on the Coinbase wallet to Base, the kind of scalability of that MVP, I think they knocked it out of the park. Some of that was friend tech, obviously. A good chunk of it was, but I think that infrastructure that's been laid, was part of what powered it.
So Ryan, you've got an entire section here on crypto monies, and we've already, touched upon a number of them that are listed here. We talked about Tether, we talked about USDC, of course, we talked about Bitcoin, right? And when you look at USDC and Tether, and you look at Bitcoin, we see both ends of the spectrum. I think Nick Carter calls Tether and USDC crypto dollars. I kind of like that term rather than stable coins. It's like kind of like a
Mm-hmm.
dollar backed IOU, if you will. And then we have our completely separate store of value assets like Bitcoin. So we have both sides of those spectrums. Do you think we get anything else in between? I mean, every cycle it seems like we try something with crypto collateralized stablecoins. I mean, you could say Maker DAO has been somewhat successful with DAI. That's still at play. It's not growing as fast as maybe the bulls would have hoped. We tried some algo stablecoins last cycle that absolutely collapsed. What's new for us in the crypto money thesis going into 2024? What do you think will work?
Honestly, I'm not sure. I so I was interested in Terra in kind of mid 2020 because the affiliation of Chia, the payment application, and what I thought at the time. And again, there's a lot of like allegations have been thrown around, but now folks are saying that all those volumes were fake and that application wasn't real or whatnot. But at the time, it seemed like you had a payment application that was useful with some underlying economic model that could ultimately, kind of feed the algorithmic stablecoin and create at least something that wasn't just turtles all the way down in terms of a crypto collateralized money. And the issues and the blow up risk were well known from day one, but at least you had that kind of fee engine and that, potential path to sustainability that was interesting. And I forget the market cap at the time, but I think it was low, right? It was like 50-60 million dollars, something like that. So it was I think a reasonable bet to make if you thought about could someone or could some model ultimately come to fruition that figures out how you can bring a under collateralized stablecoin to market that doesn't just collapse from day one under its own weight. And I've kind of gotten, I don't say jaded. I'm very skeptical. I feel like that was probably the closest we were going to get to running that experiment at scale, and I'm almost not sure whether it's worth running again, because the risk will never disappear. And you saw how catastrophic the losses were from Terra getting to 40 billion or whatever the high water mark was. I can imagine the repercussions of an algorithmic stablecoin that tweaked some of the model parameters and then got to 400 billion, right? Or 4 trillion, right? Now if that unwinds, you're collapsing the global economy. So, I don't know. Like I think that there's some interesting plays that are being contemplated right now. I know, a couple of folks have written about flat coins and do you have stable coins that could potentially um, map to purchasing power versus like actual like US dollars. I don't know. I think it's going to be extremely difficult, and I think at some point we're going to have cooperation with nation states when it comes to stable currencies. That's not to say that they won't ultimately all fail or hyperinflate or at least at the very least inflate, and so you lose purchasing power over time. But part of me kind of thinks like that's what Bitcoin's for, right? So
I
like
get that. Like,
own Bitcoin and then own your dollars, but like don't try to mix the two and then create another just catastrophic,
that's kind of a barbell type
piece of shit.
strategy,
Like, yeah,
right? We have our crypto native
yeah.
assets, and then we have our
And
fiat
again,
backed
I don't
stablecoins.
I don't mean to knock any of the entrepreneurs or any of the folks that are trying, because maybe someone figures out a model that works, but I don't know. I think it's just, you know, this is actually one area where I'm probably more on the side of, financial regulators than people would think that I would be. I don't think that we should be fucking around with algorithmic stablecoins anymore because the bigger they get, the riskier they are, right?
Sure.
You can look at you could point to any algorithmic stablecoin project right now and show me 1,000 positive metrics. And the question is going to say, okay, well, what happens when this becomes 100 million, when it
Right.
becomes a billion, when it becomes 10, but like the more successful it is, the more pronounced the risks get, and the higher the incentives, the greater the incentives are to break that. So, I fortunately, I've gotten good at identifying top signals, so I didn't lose my entire Terra investment. I sold a good chunk when Mike Novogratz got his tattoo because I thought that was a top signal, but
You
that
ever
was also a few
talk
months
about that
before.
tattoo
That
with
was also a
Mike?
few months before Do Kwon got really started to go off the rails publicly.
Yeah.
So I kind of dodged a bullet there,
Well,
but
let me ask you
anyway,
another question about our crypto money.
lessons learned.
A missing feature is privacy. But do you think we're going to get that? I know you've long been a supporter of the Zcash project, but also, I mean, I feel like if there's one battle that feels somewhat unwinnable in the U.S., it's just like privacy. I mean, we've got Tornado Cash, smart contracts being sanctioned. Do you think we can get privacy on our crypto monies, either at a crypto native store of value
Yeah.
like Ether, some sort of set of smart contracts, a layer two, something to give us private transactions?
I think that what Zuko and the kind of whole Zcash team did in terms of advancing like that whole field of cryptography is I think it's incredible, and I think it's going to be it'll be a notable achievement for a long time. The original sin of Zcash was restarting from the same issuance schedule that Bitcoin did, which I don't think could be repeated. Right, Bitcoin was kind of a miraculous bootstrapping mechanism because it was first. And with Zcash, you had this instance where from the second they launched, it was a straight shot down, right? So you could never build excitement out of the early, base. You could never, really get people fully bought in and kind of fully endorsing or kind of promoting this technology. And then you also had all of the headwinds from the regulatory state. But even today, if you look at Monero versus Zcash, Monero is almost an order of magnitude bigger now. And part of that might be because of the issuance schedule and kind of the way that they brought the token to market. But I think another big element is maybe ZK Tech, I would argue it probably is one of, if not kind of the best privacy preserving techs that we have, but it's better instantiated at the application layer for these networks than it is at the base layer for two reasons. One, not everything needs the same level of privacy, and so if you privatize the entire chain and you basically render all blockchain analytics obsolete, you have bigger problems even than AML KYC, right? With Zcash, if everything was private by default and shielded transactions, it also at scale would have been very difficult to audit the supply long term, right? And that creates, I think, some risks that financial regulators worldwide just would never allow for. Um, but I think the other element is the flexibility that you get from having like quasi public, quasi private, and like the spectrum of privacy is probably going to be better for almost all users, right? Because think about the case of like an audit, right?
Yeah.
If you're a big bank, you can't showcase or kind of tip your hand as to what you're doing with customer funds on chain, right? Because someone like Chainalysis could come in and they could review the wallet addresses and they could say, okay, this is JP Morgan and they have this customer set and this company just reported earnings. And so like maybe this address or like this on-chain movement is due to like, this particular transaction, whatever. You just can't have that. So I think the kind of hybrid privacy model is probably something that is going to work, better at scale. And the paper that's Vitalik, Amin Soleimani, someone from Chainalysis, a couple of other academics, came out with earlier this year, privacy pools is kind of this, I'd say bridge model that might work.
Do you think the
A little bit
regulators go
better
for that
than,
though, Ryan?
than the-
That's actually my bigger worry. I'm with you that privacy needs to be an app.
Well, I
And
think it's gonna be a fight no matter what. I don't think they want crypto to exist. At least not this administration, right? This financial administration doesn't want crypto to exist. So we already talked about that with Elizabeth Warren. I think if depending on what happens in the election next year, the U.S.
does any administration
is going to
though,
fork.
right? Like just the financial surveillance, FinCEN,
Well,
OFAC, North Korea hacking billions of like in DeFi. I'm worried that
yeah.
neither side of the spectrum actually wants crypto to be private.
Well, we know one doesn't. We have our work cut out with the other, right?
Okay.
Fringe, and I think the one thing I will say is there are kind of two camps on both sides, right? It's kind of weird when you think about privacy and civil liberties. The old wing of the Democratic Party and like the old school progressives like Ron Wyden have much more in common with the new quote unquote conservatives, the more libertarian conservatives that are kind of pounding the table on civil liberties and like the Bank Secrecy Act as an overreach, or but whatever the case may be, right? Just trying to rein in like the surveillance powers of the state. Ron Wyden fought for crypto in the 90s. In terms of like crypto being encryption, right? And now I think
The
you're starting
original
to see
crypto
similar sentiments on
wars.
the right. And then if you kind of run it in reverse, right? Like the Dick Cheney, Patriot Act school of the Republican wing and all the neocons, now they're getting lambasted in presidential debates,
Mm-hmm.
right? Is like Dick Cheney is a slur in Republican debates now, and I think that neocon establishment is essentially dead. I mean, I think that that right now probably 70% of the demand for or maybe even close to 75%. In the Republican Party, if you just look at kind of the leading candidates, it's for, I'd say, like anti-neocons, right? So kind of this new, more libertarian strand of the Republican Party. So it's this kind of like freaky yo-yo of the two parties and kind of where they stand from at least that form of progressivism or kind of libertarianism, civil liberties in particular. So yes, there are some old school, like classical liberals that are on the right side of this, but playing the percentages, it's very skewed in one direction.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.